Hello traders. In this video tutorial, I wanted to discuss a topic regarding Forex stats and pips. This will have some money management discussion in it, but a lot of traders come to us and they ask, I see an account or a verified account that has a losing number of pips, but the account is making 10% or 20% or whatever the case might be, but it's profiting. The account is actually a profitable account, but the pip count is in the minus or negative. How can this be? And I wanted to dive into this topic because it really has to do with trading style as well as what many of our Signal subscribers go through from a money management standpoint. So how can this be? How can you lose pips? How can you have a negative number of pips for the month, for the year, but still be making 5%, 10%, 20% or more, or whatever the case is? How can this be? And it really comes down to proper money management. And let me give you an example. If we're aiming for one-to-one money, which means if we're going to risk, for the sake of argument, 30 pips on our take profit versus 30 pips on our stop loss. Now there will be a spread in there depending on if you add that spread or not, but let's just keep it easy. Let's just say it's 30 pips take profit and 30 pip stop loss from the price that you're entering. So if your money management is correct, the total account balance that you are risking, or the percentage that you're risking, should be, as we always say, 1 to 2% per trade. With that said, let's keep this example at 1%. If you're risking 1% per trade when you make a Forex trade, you are risking, or that 30 pips, for example, that's your stop loss, should equate to 1% of your account balance. So if you win or lose that account, you will either win or lose 1% of your account balance. If you have your stop loss set, or that 30 pips set, and that equals 1% of your account. Now, let's say that you take a second trade and that stop loss and take profit is, let's say, 75 pips. And many times, especially on the GBP pairs that we trade, a trade can go 50 to 75 pips easily on an intraday trade. So let's say we send out a signal to our Signal subscribers, our copy traders. This is automated, but let's say we send out a signal, a manual signal for our subscribers to trade on, and you see a 75 pip stop loss and a 75 pip take profit. Now, this is where money management is so important. If you are risking 1% of your account again, then you will earn, or you're not putting any more risk on your account than the first trade that was risking 30 pips to make 30 pips. Now let's say you took 3 trades for the day. You take two 30 pip trades that have a 30 pip stop loss and take profit, and you take a 75 pip stop loss and take profit. Let's say you lose the 75 pip trade. It reaches stop loss and you lose 75 pips. And let's say we win the other 2 trades where we make 30 pips on each. So we have a positive 60 pips on the 2 winners, but we have a negative 75 pips on the loser. So we have a net loss in pips of 15 pips. Now again, there's a spread, but let's just for the sake of argument, let's just from a mathematical standpoint keep it at this. You would have negative 15 pips. You would be negative 15 pips for the day of those 3 trades. But if you risked 1% of your account on each of those 3 trades, you would be risking 3 total percent for the day. You lose the 75 pip trade, so you lose 1%, and you make 2% by winning those 2 30 pip trades. So if you lose 1 and you win 2, and your stop loss always equates to the same percentage, then you have actually made 1% for the day with a 15 pip stop loss, a negative 15 pips. And this is how it's done. This is how accounts can actually earn money, make money, keep increasing their return on investment or their return percentage, but lose pips. It just comes down to how much is being risked on a per trade basis. You could have there's lots of different ways to slice this, but you could have a 20% win rate if you had, if you were maybe a swing trader and you had massive winners and your losers were small. It just comes down to ratios. But for the sake of this video, with what Forex Clone does, we are intraday traders, which means most of the time we're going to be in and out of a trade for the day. So if you're a copy trader, you don't have to do any of this. It's fully automated, and we break down the percentage on every trade, and we take the 1 to 2% risk based on the stop losses and based on what our analysis tells us. But if you are a manual trader using our signals, this is really a specific video for you. You should have proper money management in place. So if you lose pips for the day, for example, like on a big trade that doesn't go that way, but you win more trades, and you're keeping your stop losses with the proper money management, the same percentage of risk each time, you absolutely should be making money if you have done it right. If you have not done it right, where you're risking the same amount for every trade no matter what the stop loss is, this is how traders will and can lose money trading Forex. If you treat every trade the same no matter what the stop loss is, you're not trading smart. You're trading, either you don't know how to calculate the pips, or you just are, blatantly taking too much risk per trade. So some days we will actually lose the number of pips, but we are winning the number of trades, and that's what matters. If your risk management is there and we're winning more trades than we're losing, which we are, and our risk to reward is roughly 1-to-1 or better, or sometimes it's, we're making 90 cents and risking $1, but it's close. But if we are winning more trades with basic ratios around 1-to-1 or better, and we're winning more trades than we're losing, if the money management is there, you will make money. This is a mathematical statistic. You are going to make money under these circumstances. So if you are a manual trader and you're using our signals, again, this video speaks to you. Make sure that every trade that you place is treated differently. When you receive a signal from us, the first thing you want to do is take a look at the stop loss projection, and that should be what you're risking. Your 1 to 2%, whatever you're trading, and that's what we recommend, 1 to 2% per trade or less. If you're using that as what to go off of, then as long as you're winning more trades than you're losing, which is the case with us, you will make money. So I hope this video finds you well. We're always interested in your comments. Please leave them below. If you have any questions for us directly, feel free to email us. We offer full copy trading and signals. Copy trading is fully automated. You don't have to do any of this, as I mentioned earlier. And if you are a signal subscriber where you want to manually trade and place trades on your own, that's great. Just make sure that your money management is in place. Make sure that each trade is treated differently. And as long as you're winning more trades than you're losing with that roughly 1-to-1 risk ratio, you will earn money in Forex. I'm going to put just a handy little link that we give out to our subscribers. It's from my FX book, and it is a lot calculator. So you can enter in your account balance, you can enter in your 1 to 2% per trade risk or less, and it's going to spit out an exact lot price or lot that you can use, and you select the currency pair, and this really just takes the guesswork out of it. So if you're using this on your trades, this will be an invaluable tool. This will help you trade with the right amount so that your risk management is there. And if you haven't listened to our risk management or my risk management video, please do so. As we always tell all of our subscribers that are trading manually, the most important part of trading Forex that supersedes everything else is risk management and money management. If you don't have this, you will lose money in Forex. So make sure you watch that video. Make sure you understand why it is so important to trade with proper money management. And even the examples, just kind of in closing, the example that I have given you today, the trader who takes those same 3 trades, the 2 with 30 pip stop loss and the 1 with 75 pip stop loss, the trader who trades the same lot price on all 3 of those loses money for the day. But the trader with proper money management who trades correctly with the right lot price makes money for the day. And that is why we are such advocates of having proper money management and really understanding this point. If you can get this, everything else is really, just will fall into place, just normal day-to-day trading. But you must have proper money management. So sometimes traders will come to us that don't know this. They will trade the same amount, or they will double up losses, just bad money management. And if you steer them, or if we steer them in the right direction, and specifically listen to this video, you can now see why money management is so important. And if you just have the proper risk for each trade, and you treat every trade differently, this is what makes the difference between a winning and a losing trader that is consistent over years and months to come. So again, I hope this video finds you well. I hope this explains really just how to set your lot amount and why it is so important, and the difference between winning and losing taking the same 3 trades. If you just sat these 2 traders down side by side, one has proper money management with the proper percentage and the other one doesn't, one loses and one wins with the exact same trades that we send. And that is why it is so important. So again, if you have any questions for us, we're always here to help. Please email us or just leave your comments below. We answer all of the comments that you guys leave. I hope this video helps you guys out in your trading journey. Thanks.